Day and welcome to the Apex Frozen Foods Limited Q3 and 9 months FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Suyash Samant from Stella IR Advisors. Thank you, and over to you, sir.
Good morning, everyone, and thank you for joining us today. We have with us today the senior management team of Apex Frozen Foods Limited, Mr. Chaudhary Karuturi, Managing Director and Chief Financial Officer, and Durga Prasad, Senior Manager Accounts, who will represent Apex Frozen Foods Limited on the call. The management will be sharing the key operating and financial highlights for the quarter and 9 months ended 31st December 2024, followed by a question and answer session. Please note, this call may contain some of the forward-looking statements which are completely based upon the company's beliefs, opinions, and expectations as of today. These statements are not a guarantee of the company's future performance and involve unforeseen risks and uncertainties. The company also undertakes no obligation to update any forward-looking statement to reflect developments that occur after the statement is made. I now hand over the conference to Mr. Chaudhary Karuturi. Thank you, and over to you, sir.
Thank you, Suyash. Good morning, everyone, and thank you. The European Union market remained robust. The company recorded a 70% year-over-year sales growth during Q3FY25 and 42% year-over-year growth on year-on-year growth on 9 months FY25. The share of the EU market in overall sales mix increased to 45% in the Q3FY25 from 36% in Q3FY24 and to 45% in 9 months FY25 versus 30% in 9 months FY24, resulting in a more geographically diverse sales mix. We remain optimistic about the market's growth potential and the opportunities it offers, especially once our long-pending ready-to-eat approvals are also secured for our new facility, which we have been awaiting literally for the past almost 5 years due to some regulatory issues between both the country, India and the EU. In light of the improving demand, the resultant global shrimp prices have also been rising. Our average realization registered a growth of 13% year-on-year and 8% quarter-on-quarter in Q3 FY25 to rupees 749 per kilo. However, due to continued constraints in the raw material supply in India, which many of you would be aware, because of the long, consistent low pricing at the farm gate level in the later part of FY24 and the early part of FY25, definitely as we explained in our earlier calls also, the mood of the primary producers was definitely low, and they were having a very conservative approach with regard to stocking shrimp post-larvae, PLs or seed at the farm level and going for stocking, and thereby reducing the overall farm level production. The farm gate prices, were quite low for most of the early part of last year in 2024, and it is only in the second half, almost from around September, the prices also started increasing very well. So currently, because of the conservative approach of the farmers and the primary producers, Of course, that definitely had an impact on the overall raw material supply. And because of these constraints, the farm gate prices grew even further. Our average purchase cost of raw materials grew 21% year-on-year and 15% quarter-on-quarter to rupees 372 per kilo in Q3 FY25. Since aquaculture shrimp in India, as you all know, most of you would know, is primarily export-driven and follows global price trends, the rising shrimp prices are definitely expected to encourage shrimp farmers to increase seed stocking, which was, as explained earlier, which was lacking in most of 2024. And we are expecting it to be increasing in the upcoming cropping season, which is already in the process right now. As we have mentioned, the current fiscal saw a lower supply of raw shrimp, and in this context, increased shrimp production would definitely be a positive development for the sector in the medium term, especially with early signs of rising demand. Coming to the financials, the net revenue for Q3 FY25 came in at 231 crores rupees, up 16% quarter-on-quarter, as against rupees 200 crores in Q2 FY25, and 56% year-on-year, as against rupees 148 crores in Q3 of FY24. In fact, it is the first time ever that our Q3 revenue is higher than the Q2 revenue. Ours is slightly a seasonal business, which most of you will be aware. Typically, Q2 is the strongest of all the quarters in any fiscal year, mainly because of the robust supply, which is usually available during that period of every year because of the favorable conditions for the farmers to grow at that point of time. For 9 months FY25, the net revenue came in at rupees 616 crores, as against 643 crores in 9 months of FY24. While global sea transportation issues are easing, with freight costs gradually decreasing, the domestic raw material prices remain firm, thereby impacting the profitability in Q3 FY25. Our gross margins stood lower at 25% in Q3 FY25, mainly due to the higher raw material prices, which I have just explained. The gross margin in 9 months FY25 were at 28%. The shrimp volume sold by our company stood at 2,903 metric tons in Q3 FY25 and up by 37% year-on-year and 7% quarter-on-quarter, as against 2,117 metric tons in Q3 FY24 and 2,710 metric tons in Q2 of FY25. Shrimp volumes sold by our company stood at 8,184 metric tons in 9 months of FY25, as against 8,646 metric tons in 9 months of FY24. In conclusion, we do remain optimistic in the near term, driven by the signs of inventory liquidation in overseas markets, an uptick in the overall demand, and the reduction in major ocean freight costs mainly. Additionally, with the current favorable pricing scenario for Indian shrimp farmers, we are hopeful about increased shrimp cultivation in India in the near to medium term. With that, we can now open the floor for the question and answer session. Thank you.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tushar Ragatate from Kamakhya Wealth Management. Please go ahead.
Yeah, good morning, sir. Thank you for the opportunity. So just wanted to know, like, the reduction in the basic custom duty for frozen fish paste and a fish hydrolysate. What would be the benefit of that to your company?
Firstly, we are using the raw material sources from domestically, and our company is not into importing of these products in our processing. But that is more for reprocessing and either selling domestically or re-exporting. So it is for such companies. In our company's case, it is more of we are mainly focused on the shrimp, as you would be aware.
Got it, sir. So just wanted to know, like you said, the realization has been increasing, but there is a disconnect in the margin. I understand it's because of the raw material. So can we consider this margin as a new normal, or you are seeing that margin to revert back in terms of gross margin I'm talking? So you went near about 35% gross margin. Now it came back to 25%. So do you see that reversal happening in the near future?
Well, as mentioned in our opening remarks, we are quite positive. See, the main point in regard to the gross margin is that there was a drastic impact on the supply issues because of the overall conservative approach of the farmers, which was explained. So because of that, definitely the supply of the shrimp had impacted almost most part of the year. We have noticed it, and now the conservative approach of the farmers is also slowly easing. It's slowly easing. It's not like there's an overnight change, but it is slowly easing. As for the past 3 months, literally, they have been seeing a very consistent higher prices, better prices for them to realize on their production at the farm gate level, compared to what they have seen for almost over 12 months prior. So this definitely is an encouragement, and as the farmers also can see better margins on their end, and they can justify their costs. So that way, it is definitely an encouragement. Definitely much better than what it was like 6 months or 9 months ago. So that way, we expect the supply also to improve, which definitely, once the supply improves, obviously we will have a better leverage for sure. So which is currently the supply is the key challenge right now, which we are foreseeing. And I mean, we expect that, as explained, we expect that to be changing. And obviously, as the supply improves, we expect a better kind of stabilization of the raw material prices also, which will definitely improve our margins in the overall and the gross margin level.
Got it, sir. Actually, the ground for this question is coming from the listed player of yours in the feed business. So they mentioned that the increase in the shrimp prices is kind of adjusting toward the countervailing duties and the import duties on the shrimp. So any say on that?
There is definitely some amount of impact, but at the same time, definitely with regard to the countervailing duty, there is certain amount of impact. But at the same time, we also have to understand that the increase in the sales price, whatever increase was there, was not on par with the increase what we had at the farm gate prices. Definitely, that is one major part, which means because of the shortage of supply, the farm gate prices obviously were at a higher level. I mean, there was a difference, of course, almost around 3 to 4% was the difference between we have seen as far as the increase rate is concerned. And it depends on different companies, as you also are noticing. Our company also is diversifying, and we are not, having the same amount of exposure what we have been having for years together with the U.S. market alone. So, which you can also see that we are also. It's not that we can ignore the U.S. market; it will continue to be our main market. But at the same time, with the current issues related to the CVDs, the higher rate of CVDs or any tariff-related issues with regard to the US, we will have a better balancing environment for our business when it is obvious that we have to diversify even more than what we would have normally done. And that is the reason you can see our sales to the EU also growing very well. So that is a big step which we have been taking from the beginning of the fiscal. As you can see, every quarter we have been growing our overall quantities to the EU market, which we have never done this much amount of volumes in the past, to the EU especially, which is one next big market which most of you would know. So yeah, that way, it depends each company how they work. But we are focused on diversification so that we don't really have the impact of CVD on a majority or most of our sales. That's how our company is trying to mitigate this issue.
Got it. So that was helpful. I'll get back in the queue. Thank you.
Okay, thanks.
Thank you. The next question is from the line of Nitin Awasthi from InCred Research. Please go ahead.
Hello, sir. First question from my side, just wanted to understand, like you said in your opening remarks, there is a lot of optimism when it comes to the farmer side of things. How are you seeing the hatchery demand, given that we have our own hatcheries? How are the conversations happening there? How is the pickup expected in that segment? Because that could indicate how the stocking happens.
Definitely, very well asked, Mr. Nitin. On that point, we have seen an improvement in our hatchery operations, but we wouldn't really comment on the general environment, because at the same time, while we would specifically say that because of certain changes which we made within our operations, and also, as you know, we have a long built farmer network over the years. Most of the farmers who were quite conservative, got conservative in the past few months, are definitely increasing their inquiries on the requirement of on the shrimp seed, which they are actually increasing their inquiries. But at the same time, there are quite a number of hatcheries which are cancelling their appointments related to quarantine, which means they are cancelling the requirement of the broodstock, maybe depending on their business needs, because farmers are very conscious, the primary producers are very conscious on the quality of the seed, especially with the problems which they have been facing in the past years. They are very conscious, and they are taking a very careful and studied decision of from where to procure their seed. And in that regard, we have seen a growth, and currently we are actually increasing, also in the process of increasing our import of broodstock to produce more number of post larvae or seed for the requirement of the farmers. That way, from our to put it straight, our hatchery, definitely we are having a very good improvement in the inquiries with regard to the seed. So that and for few other purposes, we have also been requesting and kind of insisting that all the produce from our hatchery seed, all in its entirety, should be coming back to us as a raw material, which was not, we were really not pursuing in that direction in the past. But now, because of some technical changes and which some of our customers need in regard to the European Union market about animal welfare and in that regard, so we definitely need, we would want to buy the entire product, raw material, which is produced out of the post larvae, produced out of, supplied by us. So that way, we are having a better, we are seeing better inquiries from our company's hatchery operations as such. It started almost the entire Q3 was like that, and it's slowly growing now.
Understood, sir. Heartening to hear that you are heading in that direction to make it more traceable, and I think that's where the whole industry also headed. So second question regarding the CVD part.
Yes.
I'll break the question down into three specific parts because it's a very broad discussion that happens. I just want three very, very specific parts. One, The first part, when is the revision due? Because what we happen to understand is an annual thing, but however, we cannot estimate when the revision is due. So that is the first part. The second part, we paid on certain assumptions till the final rates came out. So have we adjusted and paid the additional amount or no? Last question, the third part is what the current rate from, of course, from the quarter going forward will always be adjusted when I'm selling for the sales to US. Is that other understanding correct?
Okay. The current rate is at 5.77%, firstly.
Yes.
It was 4.36%, which was preliminary. And the period for which we paid 4.36% was the first 4 months from of the fiscal year, coincidentally, from April 1st to from April 1st to July 31st. Yes, we paid the 4.36%, and then there was a hold from August 1st to almost December 17th, and from December 17th to December 26th, we paid for that 10 days. We paid 4.36%. But from December 27th onwards, we started paying 5.77%, which we will continue to pay till the early part of 2026. And to answer your first question, the review will be initiated towards the end of December 25, and that review, the decision of that review, which will likely be will conclude within 3 months from the initiation, which means roughly by around March, April, we'll have a clarity in 2026 of what the retrospective duty would be, which means for all this period, what we are paying at 5.36%, and that little part few months which we paid at 5.77%, which we are paying currently, and 4.36% which we paid for a brief period. It's all subject to review, and like you asked, once that review is concluded sometime around March, April 26, we expect at this time that it should be reducing with much, which was long the awaited justifications and the information to be submitted by the government of India. Also, with regard to the justifications mainly about the two major programs, what we, as you know, which we benefit from is RODTAP and duty drawback. They are nothing but basically a reimbursement of the various indirect taxes which are imposed on the entire supply chain, from the hatchery side till the processing. So that information is already being sought after by the government of India, and they are also kind of compiling that. So as they provide this information, which will be very, very helpful, unfortunately that couldn't be done in the earlier investigation period. But once that is done, we definitely expect a reduction. And today, we wouldn't really want to comment on that, at what percentage it could reduce. But whatever reduced duty will be there at during the March, April 2026 when they announce it. That will be effective prospectively, as well as the refunds. I mean, we expect a reduction. The refunds for all this period, whatever we have paid, that will also be affected at that point of time. So I guess that answers the dates as well as the process in most part.
And just one clarification. So here I want to just clarify this so that there's no confusion. So the CBD is basically an annual calendar year process. Starts in January 1st, ends on 31st December. However, the hearings happen in mid of the year, hence the final decision comes in mid of the year, hence the adjustment which has to be made. Correct?
But the most important point here is we are not going to make any adjustments. If you are asking me if we are going to make any adjustments in the financials, no. If that's what you are asking. So it is very clear. We paid for certain amount of shipments. We paid at 4.36% in the current fiscal. And the remaining shipments, which are arriving. When I say we are paying duties, there, please understand the duties are upon arrival. So whatever shipment which got arrived from December 27th, we are paying 5.77%, which means most of the shipments which went in, part of them in October, and all the shipments of November, and all the shipments from December are affected by this order, right? So we have been paying on all that, and that is, there is no more adjustments. So whatever we paid, that is obviously it is got into the books, and we are not going to make any adjustments. If the U.S. Department of Commerce decides, when they decide in the future, supposedly in, as stated sometime in March, April 2026, based on their decision, at that time they may initiate a refund. So we would know at that point of time. And then whatever refund, if any refund happens at that time, we would be, basically taking it as an income because we get it at that. As you understand, there are no adjustments in any financial year as such with regard to these changes, because in our case we do not consider this as a adjustable or kind of a changed duty or change rate until that order is given. Whatever the effective date of the order will be taken for our books. That's all. You got it? So we don't make any adjustments if there is any change in the future, because the change of that will be applied from that date of arrivals, which means our shipments which are on the way will be to that effect. You got it?
Yes, sir. Understood. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Siddharth Srikumar from iThought. Please go ahead.
Yeah, thanks for the opportunity. My first question is, what in this quarter, what would be the sales volume of ready to eat?
The sales volume of ready to eat was in this quarter was only of 244 metric tons in this quarter. Of course, the overall sales in this Q3 was 8% only, to answer your question.
So the RTE plant is now operating at 8% utilization.
No, I do not take the sales number as the operational capacity, please. The sales is what goes as a shipment. There's always a gap between the sales and the shipment. The production and the sales. That is always there. So at this for the quarter, whatever shipments have happened with regard to RTE, that is 8% of our total sales. What is
8% of total volumes?
Sorry?
8% of total volumes.
Yeah.
Okay. So my next question is regarding the.
Sorry to just clarify to you, if you ask, it was 11% of our production of Q3FY25. RTE. Yeah. Okay.
Okay. So the next question I have is regarding the production scenario in Ecuador. What is your comment about that?
I don't really have much of information at this point about the production. I mean, the production is there. They are continuing to export, but their overall exports, we believe, are affected because of an energy crisis which they are facing, which we hear from the news as such, and they are having issues with regard to processing outside the farm level, the feed plants. Overall, everything is, we understand, in general is affected, but we do not know how long those effects will be there and how long they will last. But currently, we see a kind of a tapered, reduced volumes of theirs into the U.S. market, especially. And it is also definitely, maybe they are also looking at change of strategy and maybe kind of reducing their production a bit. I don't know how that's going to fare as far as 2025 is concerned with regard to Ecuador at this point, as I guess it's too early to say. But so far what we know is they are under and they have issues related to energy, electricity basically. Depends on those troubles. Accordingly, if those troubles intensify, obviously their production would be getting affected, because electricity or energy is a major component for farm level production, the processing plants, the feed plants, everything to run. It's a major without which it will be very difficult to provide the required aeration at the farms, which is the key part for the shrimp to survive in a pond, right?
Yeah. So one more question I have is, in USA, how are shrimp processors like Apex, Indian shrimp processors, faring compared to the Ecuadorian ones? Are we losing market share? And what is the realization trend for Indian shrimp in America and Ecuadorian shrimp?
The realization as such definitely is at a better level with regard to for India as far in the US market as far as it is concerned, because please understand as far as Indian shrimp is concerned, it has almost we have been having more than 2 decades of presence in the US market. So it's just not about doing volumes, but also the different types of products, the various number of SKUs which India produces for both the retail which means supermarkets, as well as the food service sector, which is the restaurant chains, is various products which are there. And similar to other Asian peers, India does a great volume of diverse mix of products. Product portfolio is much wider, much more vast than what Ecuador does. Of course, Ecuador has been trying to get into those products, but we do not see that impacting our sales to the US market, as India definitely has met and set a standard for its products in the US market, and which are, to be more precise, India has earned the trust among the US customers with regard to reliability and consistency on its products. I'm not saying specific to Apex, it's in general, like you asked, it's the country. Definitely we have achieved and we maintain our reputation for sure. In the major part, we definitely have achieved. So that way, India definitely has an edge with regard to consistent deliveries and also consistency in quality. Of course, there are certain, like one of the major disadvantages when you ask between the countries which you are trying to compare is the logistical, the time of if the shipments from that country would go like in 10 days, but our shipments could take 30 to 40 days. Apart from this, apart from the distance which we are on the other side, apart from that, we have definitely set ourselves in a very good, we have earned a very good reputation, and we continue to maintain that. The customers as well as the consumers definitely trust. We are good in that way as a country. I think that answers, but I think you mentioned about companies. So you also asked about companies.
Yeah, no, not companies, about the realization.
Yeah, the realization-wise, as mentioned, India has been very well as a reliable supplier of supplying nation for the various products which the US market needs, because it's not like India is trying to enter the US market as far as shrimp is concerned in the past 2 to 3 years, trying to change the overall product portfolio, which we have been doing for more than 2 decades. I mean, there are certain countries, like you mentioned, which have been trying to do that, but India definitely has a long established reputation, which it contains and which is recognized very well. So that way, our realizations are much better than Ecuador. And as stated, It is only the logistical part which maybe sometimes makes certain customers look at some other countries, and also a small part of the customers who are from the Latin America or South American countries who have their operations in the US. For example, any of the Latin American or South American owned stores or restaurants may be preferring products from their country, from those countries. You got the point. So that is where a big difference is as far as requirement of Indian products, as well as on a realization front. We have a better edge as far as realization is concerned.
Okay, got it. Thanks.
Thank you.
The next question is from the line of Shaurya Punyani from Arjav Partners. Please go ahead.
Hi, am I audible?
Yes, please.
So just one small question. So as you're seeing the demand is recovering, so at what target we are expecting to close this year? Because on revenue front, we are more or less flat, 9-month revenue year on year.
Definitely. But as stated in the opening remarks, we expect improvements in the supply. We did have a good slowly picking up supply. The supply will become a challenge. The key part for us to really look at the numbers, what you are asking, or give a opinion or statement about that, because the Q4 supply is yet to pick up. It is not very significant, but we are positive, and we will try to definitely do better Q4 compared to the earlier quarter fours. As you would have noticed, Q3 of this fiscal is much better, and as stated in the opening remarks. So we do expect that if subject to supply conditions, because as you also would have understood that the farmers are looking at stocking now or in the past 1 to 2 months. So we are expecting those harvests to be starting more towards end of this month and next month and onwards. It will continue to happen as they stock more. So as you know, most of the farmers harvest after almost around 80 to 90 days. Usually they start around 60-70 days, but most of the harvest happen after 80 to 90 days. So the stocking which started improvising from around November and December, mostly in January. Now is the time when they are picking up more. So based on the supply, we may be remaining more on a flattish basis, like you indicated, but we will, if the supply improves, because our order book is very intact and it's good. We're just waiting for the supply, and we do have currently we are still running at 35% capacity utilization currently, but we expect that to be improving based on the supply conditions. If the supply improves, definitely our Q4 should be better than the earlier Q4s. Please understand, as stated in the opening remarks, Q3 and Q4, or usually the second half of the year, is usually the lower performance period. This year it was different. Our first half was kind of lower, and because of mainly on the supply front as well as the demand front, whatever. So based on the supply, we expect things as the supply improves and as the harvest happens, mainly we are looking forward for that. Definitely, we expect it to be better. So overall, of course, it will remain flattish, mainly because the dominant period in our industry for us is the first half, which was, as you would have noticed, was kind of lower. So for our company, it will remain mostly flattish compared to last year. And as the supply improves, we are looking forward for better Q1 thereafter because of the supply conditions improving.
That helps. Thank you.